Good morning, everyone. I hope everyone's doing well. Guys, I was just having this conversation with someone in my DMs on Instagram yesterday, and I thought to myself, why not record a video about it and make this information available publicly and bless you all with it because I'm such a nice guy. So here I am recording a YouTube video about it. Guys, I was discussing why you need 3 trading strategies in order to succeed in this industry. Now, the first trading strategy that you need is your bias strategy, your macro strategy. It's when you go to the 4 hours, to the daily, to the weekly, to the monthly time frames, for example, and you do this higher time frame analysis, this big prediction, this big thesis that you try to develop. Now, guys, this strategy is developed independently from all your other strategies, so there needs to be work where you sit down, you open those higher time frames, and you just try to predict where the market is going to go. That's it. This is developed independently from all your other strategies. This is the first strategy. The second strategy that you need to develop, so you take that higher time frame thesis, this big thesis that you have, and you dissect it into micro theses, so into lots of trades, and this is your entry model. This is where you go to the 15-30 minutes time frame, for example, and you try to execute that trade. So you're going to those lower time frames, you're taking this higher time frame thesis. Let me give you a small example. You predict that Bitcoin is going from $20,000 to $17,000, for example, on a higher time frame. You've developed that strategy, this bias strategy, you've trained it, you've enhanced it, you've optimized it, and now you're somewhat accurate. Okay, so you predict that Bitcoin is going from $20,000 to $17,000, for example. Instead of placing one sell order from $20,000 to $17,000, what you do is you go to a lower time frames like the 15 minutes, the 30 minutes time frame. You use your entry model that you developed to just sell Bitcoin from 20 to 19,500, for example. You dissected that macro thesis that you had from 20 to 17 to smaller portions, to micro portions, from 20 to 19,500. Let's say the market then retraces, it goes down, you get another entry, then you trade from 19 to 18,500, for example. You've divided that thesis into smaller portions, and I will explain why. Now, the reason why you need to divide your macro thesis into micro portions is, first of all, because if you were wrong about that macro thesis, it doesn't necessarily mean that you're going to lose money. Because you're trading those micro portions, you might be in and out, and then the market will reverse. For example, if you expect it to go down from $20,000 to $17,000, it goes down to, let's say, 18 or 19 or 18,500, and then it goes up. Because you only traded portions of it and you're in and out, you are still making money, even though your thesis is wrong. And this is why you need those two to be trained separately. So you first train your macro thesis, you train that macro strategy where you try to predict where the market is going, and then what you do, you go and you try to train that micro strategy, this execution, the trigger to enter the trade. I also want to note something, that you can use the same strategy on your micro that you're using on your macro. So for example, an order block on a higher time frame and then an order block on a lower time frame. The order block on a higher time frame serves to predict where the market is generally going, and then the order blocks on the micro time frame are just like micro portions, smaller moves that you're trying to trade. Those are the 2 strategies that I just said. There's still the third strategy. Before I tell you about the third strategy, that the micro thesis, your execution is just an execution. You need correct circumstances and environments to be there before you execute. Let me give you a small example. If you're playing chess and I tell you the move pawn to e5, for example, is a good move, it's not a good move in all cases. Sometimes you're going to do this and you're going to be checkmated because you did it in a wrong circumstances and a wrong environment. You need to look at the board, look at the chessboard, for example, and determine whether that move is going to help you or not. That execution, you can't do it all the time. This is only your entry, you don't do it all the time. With trading, it's the same thing. The circumstances, how the board looks like, this is the macro thesis. Your execution, what piece do you decide to move, or whether you decide to execute the e5, for example, move or not, depends on those circumstances. The macro thesis is the circumstances, the micro is the execution. So you need both. You can't just rely on the micro or on your execution. And I see a lot of you guys I trade order blocks, and then you start selling all order blocks that exist on the chart, all order blocks that exist on a lower time frame. Or I trade a break and retest, and you start selling or buying all break and retests that happen on a lower time frame. You don't do this. You look at the environment. If the environment allows it, you do it. If it doesn't, you don't do it. That's it. So The third strategy that I want to also talk about is your exit strategy. Now, when I speak about the exit strategy, I don't mean stop loss and TP. That's not just it. I mean partial profits, I mean trail the stop loss, I mean stacking positions, I mean all of that. All of that is a strategy on its own, because when you're taking partial profits, you're slowly exiting out of your position. When you trail your stop loss, let's say the market retraces and hits your trailed stop loss, it means you're also exiting out of your position. All of those are inside the exit strategy category. The exit strategy is developed independently from your entry model and from your buy strategy. The same entry model, you can take the same entry model and just change the exit strategy. For example, increase your stop loss, take partial profits, trail your stop loss, increase TP, reduce risk to reward ratio, and it can turn that entry model into a profitable strategy. A lot of you guys, you take an entry model, for example, order blocks, let's say, because we're talking about it right now. You take order blocks, you try to trade them, then you're like, oh, you know what, I don't like it, I'm losing. Let's try break and retest. You know what, I don't like it, I'm losing. Let's try Fibonacci. I don't like it. Let's try trend lines. I don't like it. Meanwhile, I've fixed so many strategies, so many journals by looking at them and identifying that, okay, all you need to change, you need to take partial profits, for example, at 1-to-1 risk to reward ratio, and this fixes your profitability. So your exit strategy is always trained independently from your entry model. The same entry model, before you deem it to be a failure, you need to try out all different exit strategies, taking partial profits, trailing stop loss, risk to reward ratio, increasing stop loss. You need to try out all those different combinations before you say that this entry model doesn't work, this strategy doesn't work, I want to change it, it's a scam, all this shit. No, you need to take an entry model and try out different exit strategies with that same entry model, because it might only work with one exit system, for example, that might fix it and push it into profitability. So this is what you need to do, guys. Those are the 3 trading strategies that you need to have. I hope this video was helpful. If you'd like me to make more of those, sit down and talk to you guys, I would gladly make them, as it only takes me, as you can see, I don't know the duration of the video, but this is all the time it took me to do this video. So it's easy for me. So if you'd like it, I'd of course do more of them. Let me know in the comments. Let me know on my Instagram. The link will be in the description. You can DM me about anything, any question, any inquiries. Feel free to do so. Alright guys, see you in the next video and good luck.